Ladies and gentlemen, good day and welcome to the Q3 FY2026 earnings conference call of Rushil Decor, hosted by Asian Market Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Karan Patelia from Asian Market Securities. Thank you, and over to you, sir.
Thanks, Adeo. On behalf of Asian Market Securities, we welcome you all to Rushil Decor third quarter and 9-month FY26 investor con call. From the management side, we have Mr. Rushil Decor, Executive Director, and Mr. Hiren Bhai, CFO. I would like to call Rushil Bhai for his opening remarks, post which we shall begin the queue for question and answer. Over to you, Rushil Bhai. Thank you.
Good afternoon, ladies and gentlemen. Welcome to Rushil Decor Ltd earnings conference call for the third quarter and 9-month ended 31st December 2025. Thank you for joining us. I am joined by our CFO, Mr. Hiren Bhai. The investor presentation has been shared with the stock exchanges, and we trust you have reviewed it. Let me begin with a brief overview of the operating environment and our performances. The third quarter of financial year 26 experienced seasonally softer demand due to the festive period. Resin prices eased marginally during the quarter but remained above the normalized level, resulting in some cost pressure. Against this backdrop, our focus remained on improving product mix, strengthening distribution, and scaling up our laminates and jumbo laminates business. The laminate business was the key growth driver during the quarter. Revenues and realization improved both year-over-year and quarter-over-quarter, supported by a higher contribution from the premium products and a stronger domestic presence. Capacity utilization remained strong at over 93%. Domestic laminate volumes recorded a healthy growth while export improved substantially, driven by the better demand from the selected geographics and favorable product mix. Blended realization increased by 16% year-over-year, while export realization grew by 24% year-over-year, reflecting a higher share of value-added and differentiated products. The jumbo laminate business reached an important milestone with the commencement of commercial production under the Phase 2, making the fully planned capacity operational. We are now supplying to the key international markets, including Russia, Portugal, Slovakia, Israel, and Romania. We have completed our export obligation and are witnessing repeated orders from the multiple customers. We are also expanding into the new export markets such as Uzbekistan, Kosovo, Poland, Cameroon, Denmark, etc. Our participation in international exhibition and focused customer engagement continues to build visibility and steady inquiry pipeline. Our jumbo laminate portfolio is positioned under 3 distinct brands: Veer Clads for exterior facades, Veer Topaz for interior applications such as kitchen tops and countertops, and Veer World for the interior partitions including toilet cubicles. The clear positioning along with an expanding design and finish portfolio is helping us address a wider range of customer requirements globally. The PVC segment continued to show encouraging traction. During the quarter, we added 11 new direct distributors and over 26 retailers and dealers, further strengthening our distribution network. Turning to the MDF business, domestic demand remained stable, supported by the steady housing and furniture activity. Volumes grew both year-over-year substantially, and blended realization improved due to the better mix and pricing discipline. Export volume remained lower in line with our calibrated approach. Capacity utilization stood around 79%. Value-added MDF products continue to gain traction and now accounts for 43% of volumes and 54% of values for the 9-month period. We remain on track to achieve 50% value-added contribution by volume by the end of this financial year. To conclude, our priorities remain clear: scaling up the laminate and jumbo laminate business, strengthening our international footprints, and increasing the share of value-added products in MDF. With the jumbo laminate facility now fully operational and a growing export pipeline, we believe the company is well positioned to drive the sustained growth in our coming quarters. I will now hand over the call to our CFO, Mr. Hiren Padhya, to take you through the financial performance in detail. Thank you.
Good afternoon, everyone, and thank you, Mr. Rushil. A warm welcome to all participants joining us today. I will now take you through financials and operational performance of Rushil Decor Ltd. for the third quarter and 9 months ended FY2026. The quarter saw stable operation of both MDF and laminate business with capacities running at optimum level. MDF utilization was 79% while laminate operated at over 90%. The festive season led to relatively soft overall growth, but realizations across both business continued to improve. The consolidated financials revenue from operations for Q3 FY26 was rupees 2,106 billion, reflecting a growth of 2.3% year-on-year. Gross profit for the quarter 1,011, the margin of 46%. Gross profit margin improved to previous quarter as there was some moderation in the prices, but they are above the normalized levels. EBITDA for this quarter was rupees 231 million with a margin of 10.7%, whereas the tax for the quarter was 52 million, which is of 2.4%. For the 9 months ended FY, revenue from operations was rupees 6,313 million, a decline of 5.4% year-on-year, reflecting the operational disruptions in the first quarter. Gross profit was rupees 2,815 million with a margin of 44.6%. EBITDA for the period was 434 million with a margin of 6.9%, while the company reported a marginal loss at PBT and PAT level. With operations fully normalized, we expect better performance in the remaining part of the year. Now moving to segmental performance, starting with the MDF business. MDF revenue in Q3 FY26 was 1,486 million. The domestic market continued to perform well, with India revenue growing 29.4% year-on-year, supported by higher volumes, a wider dealer network, and improved realizations. Export revenues, however, declined due to lower volumes, although export realization remained strong. Blended realization for the quarter increased by 8.3% year-on-year, supported by better pricing discipline. MDF EBITDA for the quarter was rupees 174 million with a margin of 11.7%. For the 9 months period, MDF revenue was rupees 4,423 million with a EBITDA of rupees 284 million and a margin of 6.4%. Blended realization for the period improved by 7.2% year-on-year. Value-added products contributed 43% by quantity and 54% by value in 9 months FY26. And we remain on track to reach 50% value-added mix by end of the financial year in terms of quantity. Coming to the laminate segment, performance during the quarter was encouraging. Laminates revenue in Q3 FY26 grew by 20.4% year-on-year and 6.9% sequentially to rupees 585 million. Domestic revenues recorded a strong 55.6% year-on-year growth in Q3, whereas export revenue increased by 6.8%. Laminates EBITDA for the quarter was 57 million with a margin of 9.8%. Blended realization increased by 16% year-on-year, driven by higher export prices and shift towards premium offerings. For the 9-month period, laminates revenue was 1,577 million, up 8% year-on-year, while EBITDA was 145 million with a margin of 9.2%. From a balance sheet perspective, our net debt-to-equity ratio was 0.41 as of December 25, reflecting a comfortable leverage position. To summarize, the operation during the quarter remains stable with a healthy capacity utilization, improving realizations, and a higher share of value-added products. With a strong product mix and an expanding distribution network, we remain focused on improving profitability and growth in the coming quarters. Thank you for your attention. That concludes my remarks. We would now like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Guneet Singh from Counter Cyclical Portfolio Management. Please go ahead.
Hi, sir. Thank you for this opportunity. So I want to understand what is the revenue potential from the Jumbo Phase 1 expansion that we have done, and what was the revenue contribution from Jumbo in the current quarter, and EBITDA margins?
As I think already informed in the opening remarks, for the current quarter, the Jumbo operations has already started, but the revenue-wise, it is not so high. In terms of value, it is for this particular quarter, it is around 6 crore in terms of value. Now, coming to the profitability, though this quarter has couple of sizes and thicknesses, so I think this 6 crore value, I think analysis may not be relevant because the capacity utilization is not up to the mark. So it is in the range of 20 to 25%. So I would suggest that the next quarter would be the relevant quarter for this analysis. But overall figures are 6.27 crore for this particular quarter. And for coming quarters, yes, all the other setup in terms of marketing and everything is done. All certifications are in place. And we are just hoping for the best in terms of capacity utilization on one side and the actual dispatch during this last quarter of this financial year. I think Rushil can add something.
So talking about the margins here, as we have rightly guided in the further investor calls, our margins for the jumbo laminate will be somewhere around 14 to 16%. And blended, if you see the laminate as a whole, somewhere it will be in the average of 12 to 14%.
Okay, so what is the revenue potential from Phase 1 Jumbo? It's running at 25% utilization in this quarter, so is it about 25 crores per quarter at full utilization?
Actually, see, if we see the production processes, so once the plant is in line with all the certification and once we have everything in hand, so first year is something which the experiments with the global market goes on. So once that market acceptance the quality is done, then we get the round of orders on the repetition. So currently what our phase is going on is that we have been serving some markets with the first order where the container will reach on time, they will evaluate the quality and then the repeated orders will start flowing in. So that is the first phase which is going on. And we talk about the utilization for the next financial year, it would be in the somewhere of the average of 60% to 65% in the utilization point of view. Now talking about the revenue point of the side, somewhere around if we see that the potential on both the phases have somewhere around 200 crores of potential to be taken across on the production capacity of 60% on an average side.
All right. So currently we just have phase 1 which has commenced.
So we started both the phases. So in my opening remark only I told that we have started the commencement of production in phase 2 also. So next year is going to be a very important year for us in terms of laminate and to drive the show in that way.
Okay. And at 60% utilization, what kind of margins can we realistically do?
See, to be really on the conservative side, as I have rightly said and I have guided in your earlier question also, that the margins what we are expecting is in between of %.
Revenue.
You are asking EBITDA margins I am talking about.
EBITDA margins.
Oh, yes.
So my basic question is that, I mean, at what kind of utilization do we break even in this, and at what utilization will we reach our optimal margins of 14 to 60%?
This is all a specified product. So when we talk about the break even, it highly depends on what kind of orders we are seeking. If we seek the clairs order, or if we seek the toilet cubicles order, the break even are around at 35 to 40% of the capacity.
All right, sir. Got it. And sir, for the MDF segment, the margins have gone down from 15% to about 10-11%. So is it because of our competitors coming up with newer MDF capacity? Is that one of the reasons? And also for the price of resins, I mean, have they been on an upward trend? And what is the outlook for margin in MDF going forward?
The first answer is yes, the resin prices were up in the quarter, but we are seeing a downtrend in the resin started coming, and we are normalize the resin price what we had soon. So that margin, but talking about the competition, yes, the competition currently is on very high scale, typically on the normal MDF. That is why we have been always focused. We want to have product share more than the local MDF. So this quarter targeting 50% of our value, so that the we have can be improved on the going ahead side.
All right, sir. So is there some internal targets that we have for top line growth and in terms of margins for next year, FY27?
See, in terms of next year overall, I mean, see, this financial year, considering the fact of the first quarter affected by fire and second quarter was largely affected by this chemical prices. The overall turnover which we are expecting for this financial year is around 900 crore. And Jumbo project will be in place and will have at least 60-65% capacity utilization. The next financial year turnover should exceed 1,000 crore. That is for sure. And in terms of margins, I think overall margins we are targeting in the range of 10 to 11% at least.
All right. Got it. Got it. Thank you very much. Join back the queue.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Yash Sondalia from Edelweiss. Please go ahead.
Hi team. Thank you for taking my question. I hope I'm audible.
Yeah, you're loud and clear.
Yeah, thanks. So my question are regarding MDF. Like you already alluded a lot of points, but I really wanted to understand better on, like you said, the industry is having some price discipline. So are we seeing lesser discounts or some offers taken back by the companies which they were giving earlier to the distributors, or things are at stable places, no price hikes at least taken right now?
So we are talking about our pricing discipline. We are not talking about the industry as a whole pricing discipline. First of all, I'll be making it very clear.
And when we talk about our pricing disciplines, that means that the prices what we are getting are on the stable phases, and we'll be able to achieve this kind of a realization for upcoming quarters. So when we talk about the realization of plain MDF versus the value-added MDF, yes, we need to do 50% of the quantity in value addition so that our realizations have a better side and we get the better EBITDA margins in the bottom line as well. As there are no, everyone is fighting the price war and the game is still on because of the capacity and CAGR what we have. The India has got a round CAGR about 15 to 20% of MDF industry, but because of too many players jumping in at the same time and too many plants starting at the same time, there is a big kind of a order war going on and a pricing war going on.
Understood. And sir, for the quarter, how has timber prices went for you? Like it has increased, decreased, or been stable?
It has been stable. We have been very much successful in maintaining our timber prices, and yes, this quarter also we are seeing the same stable timber prices.
Any declines quarter on quarter? Like if I remember it right, we were expecting new crops and some declines from Q3 of FY26. Any?
Yeah, we were expecting a slight of a dip on the RM side, the wood side, but still it has not happened because of the global warming. You see, the rains have been extended, so still the wood which has to come out of the farm has not come out of the farm as it was required to. So currently for this quarter also we are thinking about the same stable price of wood what we are getting.
Got it. And also, like earlier we were hoping for good real estate cycle for MDF going in FY27. So are we seeing any green shoots over there, the demand from the real estate side?
Yeah, demand has now improved if we compare the Diwali month which we had, the October month, which really affected the demand very highly. But now we see a good demand opening up, and the order books with us are also filled in a very good manner, so that I am really confident about it. And going ahead on the real estate side, yes, there was a green flag for 27, and we are expecting the same for the India's growth story, what has been driving the real estate. Like, you know, the Commonwealth Games has already passed in Ahmedabad, so we see a positive take towards that trend, and we expect a good amount of inquiries and orders turning for that.
Very clear, sir. Thank you for answering my questions. Thank you.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Souvik Mohanty from Nuvama. Please go ahead.
Hi, sir. Thank you for the opportunity. I had a couple of questions. So first one being, can you talk a little bit more about the exports and why there has been a fall in our export numbers, specifically volumes? I think in the opening remark you alluded to the fact that it is in line with our policy. Could you just speak a little bit about that?
So first of all, when we talk about MDF exports, yes, we had some dip on the exports because we are very clear with the strategy that the expected realization what we get, if we don't get, then we seek for a new market, and we have successfully started developing other markets, so that the dependency on the Gulf market, where it is a price conscious market, we focus on the lesser side. So yes, in this quarter we are expecting a good amount of exports from the MDF as well. Yeah, it took a bit for us to start developing a new market, but now, yes, we are through it, and our product has been successfully passed in all the laboratories, and all the tests has been passed according to their requirements. So yes, we'll be expecting a good orders in this quarter.
Over and above, I think I would like to add from finance side, as we informed in the opening remark also, last export obligations already completed before 1 year, and then small obligation which was there in terms of new projects already completed within 2 months. So we are not obliged to go for export unless there is a good order and good margins. So, and secondly, if you consider the domestic, the realization is comparatively better. So whenever we are strategize our allocation for export and domestic, we generally keep in mind this particular two aspects.
Okay, I think that makes sense. Thank you so much for the explanation. The other part, if we have not compromised on our export realizations, where did our realizations fall? I can't seem to understand that part. Could you explain that?
Your voice was not clear. Can you repeat the question, please?
I'm so sorry, sir. What I was asking is, if we've not compromised on our export realizations, why should we, how did our blended realizations?
No. I think my point, if you compare in terms of domestic versus export, if you compare last maybe 6-7 quarters, so broadly it is lower generally. So generally, whenever we decide for export, this particular aspect also.
So basically, when we talk about the lower margins in exports, there are two different things. One, we maximally export our because we don't have that domestic pricing pressure to compete with. So our excess capacity whatsoever for the month, we figure out that this is going to be the scenario. That is what we export, right? So our blended margin that way keep motivating about selling more of the material into the domestic rather than exporting. But once we have then clear this amount of CBM are still what we are looking at for the maximizing the production, get the best operating margins from the production, we decide strategically to export that product, and that is what the strategy.
Understood. So if you could just speak a little bit in terms of domestic demand has been improving. However, the realization is slightly lower quarter on quarter. Is there anything that we need to watch out for?
As I said in the earlier question, first was the resin prices, what were affected, and now we are expecting to get the normalized in this quarter. Another thing was, as I remember also, that there is too much of capacity into the market in one point of time. Generally, 800 cubic meters in a year is what Indian market can accept according to the CAGR. But at the same point of time, too many unorganized player and organized player came into the market with too much of capacity. That's where the pricing pressure started, and that's where the heavy competition started. That is the ideal situation. That is the ideal way of looking at this situation, because of which the realization has been affected.
Thank you so much, sir. It's very helpful. It is better understand.
Thank you. To ask questions, please press star and 1. Next question is from Guneet Singh from Countercyclical PMS. Please go ahead.
So taking from your earlier answer, so you mentioned there's a huge overcapacity in domestic MDF market, which has caused the realizations to drop. Sir, is it the same situation in plywood also?
Plywood, I am not really very sure, because we decided to have a subsidiary company and we started some fund allocation that as well. But now there may be some, what I would say, we are now diluting that company into an associate company rather than subsidiary, the subsidiary company. But plywood market, I would say, yes, there has been always a fight between a branded players and unbranded players. So the point is that the capacity in plywood has always remained on the higher side, but there has been a brand pool in the plywood sector, which in MDF sector yet no one has created.
Okay, so basically green panel, etc., they don't have any differentiation, or for that matter, even Rushil vis-a-vis the unorganized sector?
Sorry, I didn't get you.
Sir, I'm saying that in plywood, like Century Ply is a brand and they can command some premium over the unorganized sector. So
yes.
in the case of MDF, Green Panel and Rushil Decor, etc., they don't command any pricing premium over the unorganized sector?
We get the premium. We don't say we don't get the premium, but the premium percentage what in plywood the brands get in what in MDF gets is a vast difference. Because MDF nowadays for the OEMs is treated as a commodity. Still the plywood is, if you see our HDF margins are way more better than other unorganized players. Like in plywood you see the marine ply or ISO 710 plywood has a better margins than normal ISO 303 plywood, right? So that is the same situation. That is why all the organized players are majorly focusing on value addition, because the unorganized player does not have that kind of a technology to prepare such kind of a the value-added products, and that's where the pricing war is. The MDF has got too much of pricing war. At the same point of time, value-added product does not have that pricing pressure going on.
Sir, so I understood your point, but I'm not able to understand, sir, but why is it that in MDF, the brand pull is not there, which is there in the case of plywood? So is it, sir, because of the starting raw material? I understand that in plywood the timber is required, and in MDF the byproduct or the powder of...
No. See, plywood is basically, if you see, the plywood is a majorly B2C product, right? It's not a B2B product. Plywood, OEM use plywood wherever it is required. Like their usage of plywood may be just 15% of their total requirement, and at the same point of time, 70% is the requirement of MDF. So MDF is more driven by the furniture segment and other segments where there is a directly application is going to be through B2B, not B2C. आप अगर आपके घर के अंदर MDF लगाओगे तो फर्नीचर के अंदर आएगा, वो डायरेक्ट रेडी बन के आएगा, पर डोर के लिए आप एक शीट या दो शीट खरीदोगे. जब प्लाईवुड उसके सामने आप आपके घर में जब बैकड्रॉप यूनिट बन रहा होगा, मतलब बैकड्रॉप इन द सेंस टीवी का बेडड्रॉप बन रहा होगा या बेड बन रहा होगा, उसके अंदर अगर घर के अंदर फर्नीचर बन रहा होगा कारपेंटर थ्रू पे, उसमें प्लाईवुड डोमिनेट करेगा. सो इट्स ऑल अबाउट द डोमिनेंस ऑफ द मार्केट. वो डीलर के थ्रू ज्यादा एमडीएफ नहीं बिकने वाला, डीलर के थ्रू ज्यादा प्लाईवुड ही बिकने वाला है. जबकि ज्यादा जो ओईएम्स होते हैं वहां से एमडीएफ ही बिकने वाला है, वहां से प्लाईवुड कम बिकने वाला है. एमडीएफ के अंदर आपका मशीनिंग कॉस्ट कम होता है, प्लाईवुड के अंदर मशीनिंग कॉस्ट ज्यादा होता है. तो ओईएम के लिए भी वो भी उसका एक कैलकुलेशन का पार्ट है कि हाउ आई ड्राइव माई टूल्स. इफ आई ड्राइव माई टूल्स लेट्स इन एमडीएफ देन इट इज गिविंग मी अ लॉन्गर रन. मेरा को रीशार्पनिंग उसको इतना जल्दी नहीं करना. एट द सेम पॉइंट ऑफ टाइम व्हेन वी गो फॉर प्लाईवुड, इट इज नॉट एन engineered बोर्ड, इट्स अ फ्लीच बोर्ड. Plywood is an engineered board. MDF is an engineered board, sorry. So that plays a vital role. So there is altogether a different way of looking at both the plywood industry and MDF industry.
Thank you. The next question is from Deep Gandhi from iThought Portfolio Management. Please go ahead.
Yeah, hi sir, am I audible?
Yeah, loud and clear.
So firstly, on the jumbo laminate side, so I mean, if I remember last quarter Q2, we were expecting Q3 onwards the utilization to be 30 to 40%, and we were also expecting our exports to run rate to start, at around 25, 30, 40 crores. So what happened in this quarter that the numbers were much below what we had guided in the last quarter?
Yeah, so as I told that there are too much of R&D required for jumbo laminate, and we were expecting that our first containers will reach somewhere in Q2 and we will be expecting some good volumes in Q3. But as you know, there are too much of congestion going on the sea point, like sea freight, sea forwarding side, because of which our containers were bit delayed, and the repeated orders were started, which were expected, are now started coming in. So that was the only reason. Else we are all set and we have everything in hand. And our Q4 and the upcoming financial year is expected to be a really good year for our jumbo laminate business.
So, sir, do you mean to indicate that this 25-30 crores which was expected in Q3 will now happen in Q4 and then there will be additional growth in Q4, whatever you were expecting, or it will get delayed further and only say Q4 onwards, you'll get 25-30 crores and then growth will be from Q1. How should we think of this?
So this quarter we have, our expectation for Q4 is somewhere around 20 to 25 crores. And substantially what we are targeting in next year is somewhere around 30 to 35 crores per quarter.
Okay.
But this quarter is going to be between 20 to 25 crores, what we are looking at.
Okay, sure. And so secondly, again on the laminate side, so despite the jumbo laminates contribution much lower than what we had expected, our realization this quarter are at almost 14 quarters high. So if you can, highlight the reason for the significant increase in realization.
So there are two, all the product mix. The product mix has given us good margins in the regular laminate business. And another thing is, though we did a small amount of exports in jumbo, but it was a high margin business, which has given us a good impact in terms of exports.
Sure. So jumbo was, only 10% of the revenue. So within the non-jumbo, can you highlight which product are you alluding to which has resulted in this significant increase in realization?
Yeah, so we did a couple of good orders which were high value orders. Then we did some good orders in Roma. Then we did some good orders in Far East. And typically when we say in Far East, we do in some good couple of orders in Malaysia. In Indonesia, we have amount of orders. This is all realization products, what I'm talking about, from where the realization actually drew the uptick for the realization was a key driver.
Sure. And was this one-off kind of orders which happened in H2, or do you expect this kind of orders to continue in the entire next financial year also?
See, I would say, as we are rightly focusing on laminate management, this margins is a target what we would love to achieve. And we will be focusing on such kind of orders. And the orders, some orders were such it was a project order. But anyways, all the countries are developing, and we are expecting few more good project orders from that market, which gives us a good realization in terms of per sheet realization. So yes, we are expecting some good orders from Uzbekistan, Kosovo, Poland, and Cameroon as well.
Sure. And sir, last question on the MDF side. We are in Q4 now, so are you seeing any kind of pricing discipline, any slight also increase in pricing by the industry, or is is still very price war still continuing in the market going ahead even in Q4? How is the sense?
See, we can only improve the realization by doing a value addition. As the realization for commodity MDF is still on the price war, and we don't see any price uptick over there.
Okay. Thank you, sir. That is it from my side.
Thank you. The next question is from Karan Batelia from AMSEC. Please go ahead.
Hi, good afternoon. Am I audible?
Yep.
Yeah, hi, sir. Just wanted to understand the capacity expansion at the industry level over the next 2 years. Now we've exceeded FY26 with industry installed capacity of 4.5 million CBM. So what kind of addition we see here on till FY28 for both listed and non-listed entities at a pan-India level?
I think there are 4 plants coming from both listed and unlisted players. and those are going to be a bigger capacity plant. So I think let's take an average of 800 cubic meters a day. So that's what we have heard in the market, that this is what is coming.
Right. So
additional 3,200 CBMs a day and 960,000 cubic meters a year.
Right. Sir, correct to assume that the competitive intensity is from the larger brands going ahead, while if you see last 5 years, good part of competition was from small unbranded regional players, based in Yamunanagar. So you think the industry players can have a tough time, especially on the pricing front, given the fact that many of these capex are large in size and they will come with full SKU base, unlike the competition which we saw in the last 5 years?
So currently all plants which are coming are all a big capacity plants, out of which 2 or 3 players are going to enter into the market with the first time. So again, that is going to be the situation and into the price pressure, because plants are attempting to capture the market.
Sorry, I can't hear you properly.
Yeah, so the capacity what we have got the news of is slightly from both organized and unorganized side, and with the larger capacities.
So correct to assume that industry level capacity will cross 6 million CBM by FY28.
Yeah.
Right, which is a 15% CAGR.
Yeah.
Okay. Thank you. That's it from my end.
Thank you. The next question is from Sanchita Sood from RoboCap. Please go ahead.
Hi, thank you for the opportunity. Just one question from my end. I actually missed out on the numbers you mentioned earlier. Could you please repeat the revenue and margin guidance for FY27 and FY28?
I had given guidance for the current financial year in terms of revenue. It should be around 900 crore, and margin would be around 8 to 9% in terms of EBITDA. I'm talking overall Rushil Decor as a whole. And same figures for the next financial year, that is FY27. The revenue should be more than 1,000 crore, and margin should be in the range of 10 to 11%. 28 I had not given. I don't think it is too early to give any guidance on FY28.
All right, that's all from my end. Thank you, sir.
Thank you. We'll take that as the last question. I would now like to hand the conference back to the management team for any closing comments.
Thank you all for taking the time to join us today and for your continued interest in Rushil Decor. As we continue to navigate opportunities ahead, we remain committed for achieving our strategic objectives and deliver consistent value to our stakeholders. For any other further questions, please reach out to our investor relation team at Transcript Partners. Thank you. Thank you once again.
Thank you very much. On behalf of Asian Market Securities, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.